Welcome everyone to today's video in which we're going to talk about Adobe stock, ticker symbol ADBE, because if you guys follow the channel, you know that I am a shareholder of Adobe. My current average is around $280 per share, so I am down around 5 or 6% on the stock at the moment. And if we take a look at the stock chart, Adobe is down 22% in the past month. Now this is not for any particular reason. In specific, this is because the overall market has been falling lately. Companies such as Microsoft down 15% in the past month, Amazon down 17%, and Google down 6%, so especially tech has been falling. But Adobe has been struggling for much longer. If we take a look at the 1-year chart, down 42%. In fact, if we take a look at the 5-year chart, down 47%. Now the market cap is $105 billion and analysts have them rated as a buy with 61% upside. Now the stock is trading at a forward P of 10, which looks extremely cheap, although we'll talk more in depth later about the valuation with a discounted cash flow model. And Adobe is a company that has grown revenue very consistently over the past decade, constantly growing at double-digit revenue growth, from $5 billion 10 years ago to $23.7 billion today. Now, as we have seen, the market cap is $105 billion, so they are selling at a price to sales of 4.7, around that if I'm not mistaken. So again, this is very cheap for a tech company like Adobe. Now, if we take a look at their profit, same story. It has grown tremendously. In the past 10 years, 7x, from $1.1 billion to $7.1 billion today. And one thing that I like is that they have even more free cash flow, currently sitting at $9.8 billion, which is amazing. Now, another thing that Adobe has been doing, which is amazing for investors, is buying back shares. As you can see, as the stock has gotten cheaper, they have been buying back more and more shares. Last year, they bought back, in fact, 5% of their shares, which is huge for investors because you are sharing the profits of the company with less people and you own more and more of the company. And because Adobe is a software company, their margins are insane. Gross margin is nearly at 90%, profit margin at around 30%, and free cash flow margin at around 41%. And if we take a look at the financial forecast, analysts are expecting Adobe's fundamentals to keep getting better and better. $26 billion this year and growing to $35 billion by 2030. Now, this is high single-digit revenue growth per year. It is true that this is not the double-digit revenue growth that they were doing before, but number one, this is still a lot of growth expected, and number two, this is because analysts have decreased their rating on Adobe because of fears that AI will take over Adobe, which is also the main reason why the stock price is down. And we'll talk later about if AI will take over Adobe, but right now let's focus on the financial forecast. As far as profit, the same as revenue, they are still expecting very good profit growth, reaching $33.60 per share in 2030. And another huge positive about Adobe is its balance sheet, as they have $6 billion in cash and $6 billion in debt, so they can pay off that debt whenever they want, and they are generating so much cash flow that this is great for investors. And we have seen that with this extra cash, they are buying back shares and they are also going to use it to reinvest back in the business. But now the main reason I am buying Adobe stock and will continue to buy is obviously the valuation. They are currently trading at a PE ratio of 15. But as we have seen before in this video, they have much more free cash flow, and the actual price to free cash flow is 10 at the moment. By the way, if you want access to where I've shown all the stock data, you have my code to stockanalysis.com in the description. And now, in order to take a deeper look at the valuation, I use my Google Sheet, which tells me at what price you should buy the stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions. And the intrinsic value according to my low assumptions is $396 per share, middle $509, and high $649. Now, because the stock is now trading at $257 per share, this means that if my low assumptions occur, you would get an 18.4% annual return on your money, middle 23.4%, and high 28.3%, which are huge returns, because keep in mind that the market usually gives you around 10%, so you would beat the market by a lot according to the low assumptions. Now, as far as my assumptions, I assume Adobe grows revenue between 5 and 9%, Keep in mind that this is what analysts are expecting, and they are currently growing at double digit, averaging a profit margin and free cash flow margin between 36 and 40%. They are now doing 40%, and I assigned the PM price to free cash flow at the end of the 7 years of 16, 18, and 20, and I also assume they buy back 2% of their shares annually. If you want to make your own assumptions, I'm going to leave a link to the spreadsheet down below. Super simple to use because I've done all the calculations in the background, so you only need to input your assumptions. And if you want to take a look at the historical price to free cash flow, for example, Adobe usually trades between 24 and 40 price to free cash flow, and now it is currently trading at an all-time low of 10. So this is why I believe Adobe is extremely cheap. Doesn't matter how you look at it. It's a very cheap company at the moment. In summary, we have a company that is at an all-time high in terms of fundamentals that are going to keep growing, that is at an all-time cheap, that has an amazing balance sheet, and that is buying back a ton of shares. And my thoughts on the belief that AI will take over Adobe is that I believe Adobe is a system for professionals. Meaning, yes, there are cheaper alternatives that may take over Adobe if you are a small YouTuber that uses Adobe only for thumbnails, but huge companies that are customers of Adobe will not switch to that cheaper alternative because Adobe has more quality. And Adobe obviously is investing aggressively in AI in order to maintain its leadership. Now, I want to end the video where we started. The market is probably going to continue to fall because stocks are very overvalued at the moment. So, I expect Adobe to keep falling in price, and I will never make short-term decisions or short-term predictions on stock prices. Anyone who does it has no idea. Adobe can be up or down in the next year or two, and my bet is in the long term as always. 5 to 10 year outlook. And as an investor, you should actually embrace these falls in price and these falls in the market, as it means we get stocks for cheaper. In fact, before this month, it was actually hard for me to find value in the market because everything was so expensive. But after these recent fall in prices, companies such as Adobe or PayPal are now trading at a very attractive valuation, and a lot more companies I believe are trading cheap at the moment. So my plan is just to dollar cost average into companies that I believe are cheap. And if I end up owning 100 companies because everything is cheap, I'll be very happy to own them. I hope you found this video valuable. Let me know what you think about Adobe stock and the overall market in the comments, and I'll see you in the next one.